I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers podcast show, and today, another episode answering your questions, which today is all about biweekly mortgage payments.
Biweekly? That's. I remember getting totally confused about what biweekly meant. Was that like twice a week? Or is that every other week? They say, hey,
bi-monthly is biweekly.
Well,
that is it's a.
Well, I remember I used to get notes about bi-monthly meetings. I'm like, damn, is that twice a month or is that? Anyway, so here we are, bi-weekly. So that means what?
Yeah, every 2 weeks. So it's a common question. Hey, Eddie, can I pay my mortgage payment every 2 weeks? I heard I can save a ton of money if I do bi-weekly payments. I want a bi-weekly payment set up.
Yeah, that's right. And a lot of lenders offer it. People hear it on the radio, potentially TV, you name it. And so we thought, heck, we ought to do a little podcast on bi-weekly payments. What are they, and are they all they're stacked up to be? Are they good to do?
Yeah. Okay. So number one, a biweekly payment is making 26 mortgage payments. Okay. That is every 2 weeks. Like we said, when you close your mortgage, each mortgage company will have a different payment option for you. Some banks will offer the biweekly payments to be set up, and others won't. Some in the banks that won't offer the setup, to set up your mortgage payments with biweekly, sometimes there are third-party companies that will offer to set it up for you. I do not have direct. I've never done biweekly, and I do not have any particular example. But there are third-party companies that will charge a fee to help you set up biweekly payments, and they basically help make sure your payments get to the bank.
Basically, you'd be reaching out to, the servicer, and you likely the servicer, even if you come through us, some of our lenders do have that option. You just select it. And I wanted to go back to sort of daydream a little bit on what you said about 26 mortgage payments, just so people know, that would be 26 payments in which you make a payment that goes towards mortgage. You wouldn't have 26 full mortgage payments in a given year. And just to back up, a normal mortgage once a month, 12 months a year, that's 12 mortgage payments. Okay. If you were to split those payments up into 2 payments a month, that would be 24 payments. Okay. And again, you're not making any more than you would typically make. It's just the frequency. So what you said was actually not just twice a month. It was 26. It's every 2 weeks. And if you take, 52 weeks a year, divided by 2 weeks, that's 26 times that you're making a mortgage payment.
Yeah, that's right. That's right. You're absolutely right. So you take your mortgage payment that you make. If your mortgage payment was $1,000 for easy math,
a month,
and you wanted to figure out, well, what am I going to be paying biweekly? Well, you just take the monthly mortgage payment, $1,000, and you just divide it in half. It would be $500 every 2 weeks. Okay. So it's really just a math. It's not even a trick, but it is something where it kind of tricks your brain, right? You think, oh, I'm paying every 2 weeks, $500 a month. But really what's happening is because you are paying every 2 weeks, you're sneaking in an extra payment, an extra $1,000 every year.
That's key. And I hope everyone heard that. The key to the biweekly mortgage payment program is you're putting in one extra full payment a year. Mm-hmm. So after you add up all the different payments that you make, the 26 of this, divide, add whatever it is, at the end of the day, you're making one extra payment a year.
Right. So, okay, we have 12 months in a year. If you were to make just 2 monthly payments, right, 2 payments every month, that would be only 24 payments. Mm-hmm. So that the 26 is where you sneak in that extra payment.
Yep. And so, example, $1,000 a month, as you said, you pay it every 2 weeks. It would be 500 instead of paying $12,000 a year like you normally would in your mortgage. You would have two extra $500 payments, which would be 13,000. So again, there's your extra 1 month payment for every year. Does that make
That's
sense?
correct. That's correct. And so we'll try to put something up here on the screen here to show you. There's a lot of biweekly calculators out there online. One of these is from Bankrate. There's several others, but I did double check the math. They were all saying the same thing. So if you look at the biweekly payment calculator and you put in a balance of $300,000 at 2.99% interest rate for 30 years, what you will see in this sample, or is it this example, is you have a biweekly payment of $631.60 every 2 weeks. Okay. And that $631, if you just look up a little bit more, that's just a half. That's exactly half of the payment, the regular monthly payment of $1,263. But what's important is that you look at the total interest. Look at that. It says over the entire life of the loan, the total interest that you would pay on this biweekly payment, this great savings, what people talk about, these great savings with interest, you would be paying $133,448
on the biweekly plan.
On the biweekly plan, right?
Okay.
So, and we'll put up a spreadsheet here. It's an amortization schedule of just a normal mortgage amortization schedule. And what you'll see is the same loan amount, the same interest rate. But then you'll see what happens if you just take your monthly payment, divide it by 12. That's $105. If you just take your that payment of $1,263 and divide it by 12, and you just add, that's $105. And you just added that $105 every month as just an extra principal reduction. What happens? Okay, because that's one way of basically putting in an extra payment every year. Look at the bottom line. Total interest, $134,560. Over the entire life of the loan, it is basically identical to the biweekly program.
What? You mean that you can get to the same spot by just simply making a little extra payment?
That's right. Just add 1/12 of your payment every month, and you basically can arrive to this actual same savings. And it is something where, I do think the biweekly program, I'm just going to go out on a limb and say, I do think it was marketed by companies who were charging those fees.
Mm-hmm.
I can't think of any other real reason why they would be doing this. But
yeah, some of these companies, because we did some digging on this, some of these companies, I think, were trying to cater also towards those that were getting paid biweekly. And they thought, how nice would it be for it to be, an automatic payment, coming out of your, and it wouldn't come out of your check, it'd come out of your bank account based upon when you get paid.
If the bank is just saying, hey, we can set these up for you for convenience and you don't have to pay any fees. Yeah, you're right. Maybe that is, okay to do, but definitely do not pay anybody. If there's an extra fee for it, don't do it. It's not worth it.
Right. And I was trying to think of a good example of what this would be, and the best thing I could come up with is like a tire rotation. That if mortgage company was a tire company and they said, hey, rotate your tires every 5,000. This is like rotating them every 2,500 miles instead of every 5,000. You're going to end up getting a tiny bit more life out of your tire, but the amount that it costs you to go to the tire shop every 2,500 miles, the gas money, the wear and tear,
you're over rotating.
You're over rotating. So actually, that's a good point. This, I think, we'd probably classify this as an overpayment. It's an overpayment structure because the idea is you can pay your loan off quicker if you do biweekly. Guess what? You can pay your loan off quicker if you just add a little more to your principal. There is no interest savings, and if they say there is, it's going to be a gimmick because this is all super formula driven. It's all mathematics. And what would stop a company from offering a weekly mortgage payment program? If they did, it'd be the exact same concept. And we'd say the exact same thing. You're over rotating, you're overpaying. Or
overthinking.
You're overthinking. Really? Yeah.
Trying to get over, you're trying to be clever and think, it makes sense. Hey, every 2 weeks, whatever, anyway, I think that this is it's still a very common question we get. It's really started, I believe, about 20 years ago in the mortgage servicers and these companies, these third parties started offering it. So again, it's still heavily used and still something that people are asking. So if you have any questions on this, be sure to ask us. The Mortgage Brothers team would love to help you. If you like this, our show, be sure to subscribe, be sure to like this episode, be sure to share it, and ask us questions. We'd be happy to help anytime.
Awesome. Call anytime, folks.
Hey guys, thanks for listening to the Mortgage Brothers Show. Please let us know if you have any questions you'd like us to answer on this podcast. You can email your questions to tom@azmortgagebrothers.com or yours truly at eddie@azmortgagebrothers.com. And be sure to ask us for a free quote on your next mortgage. Tom and I will personally work with you and help you through the whole process. Signature Home Loans, LLC does not provide tax, legal, or accounting advice. This material has been prepared for informational purposes only. You should consult your own tax, legal, and accounting advisors before engaging in any transaction. Signature Home Loans, NMLS 1007154, NMLS number 210917 and 1618695, Equal Housing Lender.